So what does your $50,000 look like to get started? This could be 50 grand, this could be 100 grand, you can scale it, you can do the numbers. So let's say we've got 50K, we'll draw them up here. What does $50,000 buy us? Let's say we go and buy a property for $200,000. You'd put down a 20% deposit, which would be $40,000. Means that you'd have a $160,000 loan. And then you'd have 10K left over for closing costs. 50K, 200K purchase, $40,000 deposit, $160K loan, $10,000 stamp duty, legal fees, etc. With that 160K, let's say we're at a 6% interest rate, that'd be about $9,000 a year, roughly. 1, 2 extra zeros. $9,000 a year. So if you've got $9,000 a year, is about $180 per week in mortgage repayments. If this thing rents for $300 a week, you've still got $120 to pay for council rates, waters rates, real estate fees, whatever. So it'd be fairly neutral sort of cash flow property. That's all good and well. Nathan, you said I need 10 properties to retire. You've got me one, you spent 50K, now I've got no more cash left, how do I buy more? Great question. That's where we move them over. This thing's a wonderful thing, right? This thing's a wonderful thing, right? So we've got our 50K, we go there, we go back to the bank, right? This is the importance of buying the properties that are below market value. The cash flow covers all the expenses, so it's not eating into your lifestyle, but you're building wealth. So you take that property, you've got the property that's you've purchased for $200,000 here. You go back to the bank revalues it, and they say, your buyer's agent, Nathan Birch, is the best buyer's agent out there in the world. It's now worth $50,000 more. It's been a week, 2 weeks, a month, 3 months, whatever. We're revaluing at $250,000, right? So then you revalue at 250 grand. I'm going to stand on this side because it's easy for me to write it. 250K, the bank will give you 80% of that, which would be $200,000. So your new loan's $200,000, but your old loan's $160,000. So that means that you take the 200 minus 160, which would give you $40,000 in equity up. Right? So your 50K, 200K, yada, yada, yada. Now what you do is you take, let's move the screen over a little bit. You take the 40,000, that might get your property 180,000. That might mean that you've had to save another $10,000 to throw into the kitty, or the property may value at 260,000 or whatever. I just use the 250,000 as a valuation here. I can't guarantee what the property is going to value at. 40K, 50K, and then you start the process again. You go back to step number 1, which is where you bought that first property using the 50K, 200 grand, so on and so forth. So technically, let's see how I can draw certain things on here. Technically, we buy the first property, we pull out the equity, buy the second property, we pull out the equity, buy the third property, pull out the equity, buy the fourth property, pull out the equity, and suddenly we've got 10 properties in our portfolio that are all cash flowing, putting money in to support your lifestyle. So if you have 50K, a lot of people are sitting out there in Sydney in 2024, Gold Coast in 2024, Brisbane, Perth. I can't get into the property market, I can't do shit, right? I've only got 50K. 50K has been able to buy properties 2003. 50,000 has been able to buy properties in 2010, been able to buy properties in 2020, and it's 2024. I'm buying properties in capital cities, major capital cities in Australia, not little country towns or anything like that. I'm buying properties today in major capital cities for cheaper than what you're buying in little country towns, right? The deals are still out there. You can get started with 50,000. All it takes is that first 50,000 to get into the second property, third property. Does this work if you might be sitting here thinking, I've only got $30,000. Well, if we only had $30,000, the same concept would apply. The only difference is that the 30,000 you might buy a property for 140 grand or 150,000 and go from there. So if you need help on formalising a plan or wanting to know more about equity and how you can leapfrog starting with only a certain amount of money, reach out to my team. 1300 367 925. Email us admin@binvested.com.au. There might be some sort of link on here where you can book a call straight to my team to have a discovery session to see what options there are. Here at B.Invested, I help people from locating and buying the properties and negotiating and giving the guidance to build out that portfolio. Help people manage the rentals via the property management firm. Also help people finance their properties via Zinger Finance. So if you need help, no matter what part of the journey you're on, reach out to us. We can put you in contact with the right team member and go from there. Thanks a lot for watching. Have a great day. Bye for now.